Let's talk about day trading, the dream job plastered all over social media. You see people flaunting their setups, boasting about making thousands before breakfast. The appeal? Freedom, flexibility, and the promise of fast money. But for every flashy success, there are countless silent failures. The stock market is fiercely competitive, pitting you against pros and algorithms. It's not about luck or secret tips, it's about mindset, discipline, and risk management. Profitable traders focus on protecting their capital, not chasing jackpots. We'll break down the habits and traps that separate winners from losers. This isn't a stock-picking guide, it's a blueprint for thinking and acting like a pro. Success in trading is about playing the long game, not chasing quick riches. Profitable traders treat the market like a business, not a slot machine. They plan, track, and refine their strategies, focusing on long-term results. Every trade is just one of many. No single win or loss defines them. Before the market opens, they've done their homework and know exactly what they're looking for. They execute tested strategies, not random hunches. The goal isn't to get rich quick, but to build wealth steadily. In contrast, gamblers chase thrills, jump in on hype, and let emotions dictate their moves. Profitable traders manage risk and probability, controlling what they can. They don't try to predict the future, they stack the odds in their favor. It's repetitive, sometimes boring, but it's what works. The edge comes from discipline, not excitement. That's the real difference between winners and everyone else. The real secret weapon? Risk management. Professionals protect their capital above all else. They set strict rules, like risking no more than 1% of their account per trade. For a $30,000 account, that's a $300 max loss per trade, no exceptions. Position size and stop losses are calculated before entering any trade. This discipline keeps losses small and survivable, even during losing streaks. Amateurs often risk far more, hoping for a big win, but one bad trade can wipe them out. Professionals know trading is a marathon, not a sprint. They live to trade another day by keeping losses manageable. The difference isn't in the setup, it's in how you handle being wrong. Consistency and survival are the real goals. Protect your capital, and you give yourself a chance to win. That's the foundation of every successful trader. Mindset and risk management matter, but you also need a clear, actionable strategy to guide your decisions. Without a plan, even the best intentions can quickly unravel in the fast-paced world of trading. Profitable traders use well-defined, tested systems for finding high-probability trades. They don't rely on gut feelings or hunches. Instead, they trust in a process that's been proven over time, through both backtesting and real-world experience. The specific strategy isn't as important as having one, and following it with discipline. Whether it's trend following, mean reversion, or breakout trading, the key is consistency and adherence to your chosen method. Rules for entry, exit, and trade management remove emotion from decisions. By setting these rules in advance, you protect yourself from impulsive moves that can sabotage your results. For example, only buy above a key moving average after a breakout on high volume. This kind of rule-based approach helps you filter out noise and focus on trades with the highest potential. Exit plans include both stop losses and profit targets. Knowing exactly when you'll get out, win or lose, removes uncertainty and helps you manage risk with confidence. The hardest part? Sticking to the plan, especially when emotions run high. Markets can be unpredictable, and it's easy to second-guess yourself when things get tough. Discipline is forged through repetition and trust in your data. By reviewing your trades and learning from both wins and losses, you build the confidence needed to stay the course. Sometimes, the best trade is no trade. Pros know when to sit out. Patience is a skill, and waiting for the right setup can be just as important as taking action. Amateurs feel compelled to trade every day, but pros protect capital by waiting for quality setups. They understand that not every day offers a good opportunity, and that sitting on your hands can be a powerful move. Trading less can mean losing less. Fewer trades often lead to fewer mistakes, and smaller losses help preserve your account for the long run. The real magic is in consistency, not constant action. Over time, steady results compound, and that's what separates successful traders from the rest. Protecting capital includes avoiding bad trades, not just managing the ones you take. Sometimes, the smartest move is to simply say no and wait for a better opportunity. That's how professionals stay in the game, by following a blueprint for success, built on discipline, patience, and a commitment to their process. Unprofitable traders chase thrills and dream of life-changing wins. They risk huge chunks of their account on hot tips, hoping for a jackpot. This all-in mentality is a recipe for disaster. One bad trade can erase months of gains. Greed takes over when trades go well. They hold too long, hoping for more, and often watch profits vanish. Winners turn into losers because there's no plan for taking profits. The pros are content with steady, small gains. Amateurs swing for the fences and strike out more often than not. The goal isn't to maximize every trade, but to build consistent profits over time. Chasing jackpots leads to ruin. Focus on the process, not the payout. For novices, emotion is the enemy. Fear and greed drive their decisions. Greed makes them hold too long or revenge trade after a loss. Fear keeps them from taking good trades or makes them exit winners too early. They ignore stop losses, hoping losing trades will bounce back and end up with bigger losses. This cycle of emotional decisions leads to letting losses run and cutting winners short. It's mathematically impossible to win this way. Pros neutralize emotion with strict rules and automation. They trust their system, not their feelings. Discipline means sticking to the plan, even when it's uncomfortable. Feeling fear or greed is normal. Acting on it is fatal. The difference is trading the plan, not the emotion. That's what separates the pros from the rest. Meet Alex and Ben, two new traders, each starting their journey with $20,000 in their accounts. Both are eager to make their mark in the world of trading, but their approaches couldn't be more different. Alex is methodical and patient. He spends hours learning about risk management, making sure he never risks more than 1% of his capital on any single trade. He follows a simple, rule-based strategy that he's tested and refined, focusing on long-term growth rather than quick wins. Alex's trades are small, but he's consistent. He takes modest profits when the market moves in his favor and cuts his losses quickly when things go wrong. Over time, these small wins add up, and his confidence grows with every disciplined decision. Ben, on the other hand, is impulsive and easily swayed by the latest market buzz. He chases hot tips from social media, risks large portions of his account when he feels lucky, and lets his emotions dictate his trades. Ben's first big win comes quickly, and the rush of success makes him overconfident. He starts to believe he's found a shortcut to wealth, reinforcing risky habits and ignoring the dangers lurking beneath the surface. Meanwhile, Alex sticks to his plan. Even when he loses a trade, he doesn't panic. He logs his results, learns from his mistakes, and ends the day with a small but steady $200 gain, proof that discipline pays off. Ben, emboldened by his earlier win, bets half his account on what he thinks is a sure thing. In just minutes, he loses $3,000, leaving him shocked and desperate to recover. Alex's account grows slowly and steadily, his balance inching upward as he sticks to his rules and avoids emotional decisions. Ben's account, however, swings wildly, soaring one moment, crashing the next. The stress takes its toll, and his confidence begins to crumble. In a desperate attempt to win back his losses, Ben starts revenge trading, making bigger and riskier bets. Each loss digs him deeper into a hole. Alex's process may seem boring, but it's effective. His steady, disciplined approach builds real wealth over time, free from the emotional roller coaster. Ben's journey, fueled by emotion and luck, ends in disaster. The stress and losses leave him exhausted and disillusioned. The lesson here is clear. In trading, consistency and discipline are far more valuable than luck or excitement. True success comes from building good habits, not chasing thrills. Alex survives and thrives, steadily growing his wealth. Ben, overwhelmed by stress and poor decisions, eventually burns out and leaves the game. In the end, the real difference between success and failure isn't the trades themselves, it's the habits behind them. Want to be like Alex? It's not just about talent or luck, it's about building the right habits, day in and day out. Every successful trader you admire started with the basics and stuck to them, even when it wasn't glamorous. Build the right habits from day one. The earlier you start, the sooner you'll see progress. Habits are the foundation that support your growth, especially when the market gets tough. Start with a detailed trading plan. Write down your goals, your strategy, your risk rules, and your daily routine. Don't just keep it in your head. Putting it on paper makes it real and gives you something to measure against. Your plan should be so clear anyone could follow it. If you handed it to a friend, they should know exactly what to do. This level of clarity keeps you accountable and focused. Next, keep a meticulous trading journal. Record every trade, your reasoning, and your emotions. This isn't just busy work, it's how you learn from your wins and your losses. Over time, your journal becomes your most valuable teacher. Review it regularly to spot strengths and fix mistakes. Look for patterns in your behavior and results. Are you making the same errors? Are there setups you trade best? Honest reflection is how you improve. Start small. Use a tiny account or a simulator until you prove you can follow your plan. There's no rush to trade big. The market will always be there. But your capital won't if you're reckless. The goal isn't to make money at first, but to build consistency. Focus on executing your plan perfectly, not on the dollar amount. Consistency is what separates amateurs from professionals. If you can't win small, you won't win big. The habits you build with a small account are the same ones you'll need when the stakes are higher. The market punishes big mistakes with real money. Protect yourself by sticking to your rules, especially when emotions run high. Discipline is your best defense. Finally, commit to continuous learning. The best traders never stop studying. They read, watch, and learn from others. Every day is a chance to get better. Markets change. What works today might not work tomorrow. Stay curious and flexible. Adapt your strategies as the market evolves. Study, adapt, and stay humble. The moment you think you know it all, the market will prove you wrong. Humility keeps you open to growth. Profitable traders are lifelong students. They seek out new ideas, learn from their peers, and never stop improving. Improvement is a journey of small, steady steps. Celebrate your progress, no matter how minor it seems. Each step forward builds your confidence and skill. Build these habits, and you'll give yourself a real shot at success. Remember, winning in trading isn't about one big move. It's about doing the right things over and over until they become second nature. Becoming a profitable trader isn't about secret formulas or genius predictions. It's about discipline, structure, and emotional control. Most fail because they chase excitement, ignore risk, and let emotions rule. Pros treat trading as a business, focusing on steady gains and capital protection. Their edge is unwavering risk management and ironclad discipline. Alex and Ben's story says it all: slow, steady, rule-based wins. Emotional, high-risk gambles lose. Anyone can learn these habits. They're not innate talents. Build a solid plan, manage risk, keep a journal, and keep learning. Your success isn't defined by your biggest win, but by how you handle your losses. The path to profitability is a marathon of discipline, not a sprint. Choose the habits of a professional, and you give yourself a real chance. That's how you succeed where most fail.